Sarawak Oil Palm Berhad, known as SOP, is one of Malaysia's leading integrated oil palm company. It has been listed on the main market of Bursa Saham Malaysia, and its headquarters is located in Miri, Sarawak. SOP operates across the entire palm oil value chain, from oil palm cultivation and milling to refining, manufacturing of palm-based products, and even property development. This integrated business model allows the company to maximize value at every stage, from plantation right through the downstreaming process. As of 2025, SOP managed 22 oil palm estate and 7 palm oil mill, along with 1 downstream processing complex with operations spread across many parts of Sarawak. The group owns more than 84 hectares of planted oil palm, of which approximately 97,700 hectares are mature palm, making SOP one of the most largest plantation in Sarawak. So, in terms of financial performance for the financial year ended 31 December 2025, SOP recorded a turnover 5.68 billion, a profit before taxation of 660.8 million, and total asset of 5.72 billion. This strong performance was supported by stable crude palm oil price, efficient plantation management, and the company integrated downstream operation. Overall, SOP stand out as a financially strong and well-diversified plantation company with a long-term commitment to sustainable palm oil production, operational excellence, and value creation for shareholders.
Jaya Tiasa Holding Berhad is a diversified, resource-based company listed on the main market of Bursa Malaysia. Established in 1995, the group began with timber operations before expanding into oil palm plantations, reforestations, and more recently, property development. The company is headquartered in Sibu, Sarawak, with operations concentrated mainly within the state. Today, Jaya Tiasa runs 3 core business segments: oil palm operations, timber operations, and reforestations, and other supporting business. The group manages 10 oil palm plantations and 4 crude palm oil mills, with approximately 67,600 hectares of planted oil palm and more than 120,000 hectares of reforestation areas. In 2025, the company also entered the property development sector, acquiring the strategically located land in Sibu to diversify its future revenue streams. In terms of financial performance, for the financial year ended 30 June 2025, Jaya Tiasa achieved revenue of RM 1.17 billion, profit before taxations of 243.13 million, and profit after transactions of 174.44 million. The group also strengthened its financial position significantly by fully setting its term loans, resulting in a net cash position and much lower finance costs. Overall, Jaya Tiasa remained focused on sustainable business practices, operational efficiency, and strategic diversification, maintaining its position and one of Sarawak's major plantations and timber companies.
Liquidity ratio. Number 1 is the current ratio. The current ratio for GT is 4.76, that has a higher current ratio compared to SOP is 3.69. This means that GT is in a stronger position to meet its short-term obligation using its current asset and providing a better safety margin for creditors than SOP. Number 2 is quick ratio. The quick ratio for JT is 3.96, that outperform compares to SOP is 3.60. This means that even after excluding less liquid asset like inventory and prepayment, JT maintains a superior ability to cover its short-term liabilities immediately.
So, For the profitability ratio, we can see from the net profit margin, which is the net profit margin of this Jaya Jasa is 0.87%, which is higher than net profit margin of the SOP, which is 0.7. This means Jaya Jasa is slightly more efficient at converting its revenues into actual profit after accounting for all expenses. And then we move to the gross profit margin. The gross profit margin of Jaya Jasa is 30.05%, with significantly outperform SOP, which is 16.87%. This shows that Jaya Jasa has better control over its cost of goods sold, or more favorable pricing strategy relative to production costs than SOP. So next one is return on asset, which is ROA. The return on asset of SOP is 0.69%, which is better than Jaya Jasa, which is 0.61%. This indicates that SOP is slightly more efficient at utilizing its asset to generate net income. Last one is about return on capital employed. The return on capital employed of SOP is 13.85%, then perform better than Jaya Jasa, which is 13.34%. Which this means that SOP is more effective at generating both debt and equity holder from the capital invested in the business.
First one is the efficiency ratio. So number one, inventory turnover. SOP performed 70.27 times better compared to JT, which is 15.98 times. This means that SOP is more efficient at managing its inventory level and selling its product quickly. Number two is average collection period. The average collection period for JT is 40.51 days, which is better than SOP, 22.08 days. In terms of speed of collections, this is because the lower the number, the faster the cash conversions. Number three is total asset turnover. The total asset turnover for SOP is 1.04, which perform better compared to JT, which is 0.59. This means that SOP is more efficient at generating sale revenue for every ringgit invested in total assets.
For the leverage ratio, first, debt ratio. Jaya Jasa has 16.92%, which is lower debt ratio compared to SOP, which under 24.31%. This is because Jaya Jasa relies less on debt to finance its asset and represent a lower financial risk compared to SOP. Second, debt to equity ratio. Jaya Jasa has 123.59%, which show a higher debt to equity ratio compared to SOP, which is 32.11%. This is because Jaya Jasa relies much on debt financing relative to shareholder equity. Lastly, time interest earned. Jaya Jasa has 14.95 times perform better compared to SOP, which is 0.70 times. This means that Jaya Jasa has a much stronger capacity to cover its interest expense from its operating income, indicating lower default risk. In conclusion, both Sarawak Oil Palm Berhad and Jaya Jasa Holding Berhad show the good financial performance and are well-established companies in the plantation industry. Based on our ratio analysis, each company has its own strengths. Sarawak Oil Palm performed better in asset utilization, inventory management, and return on capitals, showing that the company used its resource effectively. On the other hand, Jaya Jasa recorded the stronger liquidity, highest profitability, faster debt collections, and better interest coverage, indicating a stronger overall financial positions. Overall, we conclude that the Jaya Jasa Holding Berhad that performed better because it achieved the better result in most of the key financial ratio. So the company has the stronger financial stability, manage its resource effectively and is well positioned for the sustainable growth in the future. Thank you.